Welcome to Explain the Charts, your go-to channel for comprehensive market insights. Today, September 19th, 2025, we're diving deep into Apple, ticker symbol Apple, a stock that has been at the epicenter of market discussions this month. The broader economic landscape is complex, with the Federal Reserve already implementing one rate cut in 2025 and anticipating two more, a move that has fueled rate cut relief on Wall Street. This sentiment has propelled the Dow, S&P 500, and Nasdaq to clinching new record highs, showcasing robust investor optimism in certain sectors. However, beneath this bullish surface, concerns linger about a weakening labor market and persistent inflation, which the Fed chair acknowledges as no risk-free paths now. These macroeconomic crosscurrents create a nuanced environment that significantly influences even giants like Apple. Let's pinpoint the key news items that have recently shaped Apple's trajectory. A significant positive catalyst emerged in early September 2025. A favorable U.S. federal court decision upheld a crucial $20 billion deal with Google. This ruling, ensuring Google remains the default search engine on Apple products, is a substantial win, potentially bolstering Apple's long-term strategy in AI and search tools. The news reports highlighted an immediate positive reaction, with Apple shares reportedly surging over 4% in after-hours trading and nearly 3% in pre-market activity. This kind of external validation can provide a strong fundamental underpinning, even amidst product-specific challenges. Examining the daily chart, we can clearly see the market's response to the Google ruling. Focus on the period between September 2nd and September 4th, 2025, represented by these candles. On September 2nd, the stock closed at $229.72. Then, a strong bullish engulfing candle on September 3rd propelled the price upwards to close at $238.47. This impressive 3.8% rally over these 2 days perfectly illustrates how positive regulatory news can instantly translate into significant price appreciation, confirming the news sentiment. The volume during this period also showed a healthy increase, lending credibility to the upward move. However, shortly after this boost, Apple faced a significant hurdle: the highly anticipated iPhone 17 launch event on September 9, 2025. Wall Street analysts and investors were largely underwhelmed, perceiving the new devices as offering only modest enhancements and incremental upgrades rather than groundbreaking innovation. A critical point of disappointment was the minimal discussion around new artificial intelligence capabilities, leading to concerns that Apple's Siri is lagging behind competitors. This collective sentiment sparked a sell the news reaction, with reports indicating a notable drop in share price. Analysts like Needham unequivocally stated that AAPL shares would not work until there is an iPhone replacement cycle, highlighting the perceived lack of a super cycle. Let's trace this negative impact on our daily chart, specifically from September 8th to September 11th, 2025. Following the pre-event close of $237.88 on September 8th, we see a distinct bearish reversal. The stock dipped to a close of $234.35 on September 9th, and then suffered a more pronounced drop, closing at $226.79 on September 10th. This cumulative decline of over 4% from the pre-event peak to the September 10th close clearly visualizes the market's disappointment with the iPhone 17 announcements. The prior support level established around $234 to $235 was easily broken, pushing the stock towards a new short-term support zone around $226 to $227. Now, let's zoom out to the full daily chart to understand the broader context of these movements. Apple has experienced a significant long-term uptrend, ascending from the $180s in May 2024 to an impressive 52-week high of $259.02 in December 2024. However, the year 2025 ushered in increased volatility, including a sharp correction in early January, aligning with reports of the stock being down 7.1% year-to-date. A notable deep dive occurred in April 2025, seeing the stock plummet to $172.42, only to stage a powerful, rapid rebound, signaling strong underlying demand at lower price points. Currently, Apple is trading at $237.88 as of September 18, 2025, showcasing a recovery from the immediate post-iPhone 17 dip. This recovery suggests that while the initial reaction was negative, some buyers have stepped in, perhaps anticipating future catalysts or recognizing the stock's fundamental strengths. Transitioning to the 1-hour chart, we gain a more granular perspective on Apple's very recent price action. Focusing on the trading activity from September 16th to September 18th, after the iPhone 17 event and subsequent recovery, we observe a period of relative consolidation. The price has largely traded within a confined range, specifically between approximately $237.50 and $238.50, forming a tight rectangle pattern. This indicates a phase of indecision, where neither buyers nor sellers are asserting dominant control in the short term. Volume during these hourly sessions has been moderate, consistent with a consolidation pattern rather than a strong directional move, hinting that traders are awaiting fresh news or market signals. Moving to the 15-minute chart for the most immediate snapshot of trading leading up to our analysis on September 19, 2025, we observe remarkably tight price action. Throughout September 18th, the stock largely fluctuated within a narrow band of $237.50 to $238.50. Volume remained relatively subdued, especially in the later trading hours, suggesting low conviction and a wait-and-see approach from intraday traders. The very last 15-minute candle for September 18th closed at $238.15, slightly above the daily close of $237.88, which can be attributed to after-hours trading activity or minute-by-minute fluctuations within the broader daily average. This short-term stability, however, could be the calm before a potential breakout or breakdown, so close monitoring is advised. Now, let's pinpoint the key price levels to monitor for AAPL's future direction. On the resistance front, the immediate level to watch is the $238.50 to $240 range, which represented the ceiling before the iPhone 17 event. A successful breakout above $240, especially if accompanied by strong buying volume, could pave the way towards analyst price targets of $241 and even $260. Beyond that, the historical all-time high of $259.02 from December 2024 stands as a formidable long-term resistance, demanding significant bullish momentum and potentially revolutionary news to overcome. Conversely, defining key support levels is equally vital. The immediate critical support is the post-iPhone 17 low around $226.79 to $227, a level that prompted a strong bounce and prevented further steep declines. A decisive break below this $226.79 mark, particularly with increased selling pressure, would signal a renewed bearish trend. Such a breakdown could open the door for the stock to retest lower supports in the $220 region, corresponding with early 2025 lows. On a longer-term horizon, the April 2025 low of $172.42 serves as a robust historical support, representing a significant price floor that would likely only be challenged under severe macroeconomic downturns or major company-specific crises. For now, the $226 to $227 zone is the short-term battleground for bulls and bears. When considering reasons to be bullish on Apple, several factors stand out. The broader market's rate cut relief sentiment, pushing major indices to new records, creates a tailwind for growth stocks like Apple. Apple's significant win in the Google antitrust case not only preserves a massive revenue stream, but also enhances its long-term potential in AI and search technology development. Furthermore, reports of substantially increased shipment forecasts for the upcoming iPhone Fold suggest future innovation and new product cycles could reignite investor excitement. Analysts like Melius Research have raised price targets to $290, citing greater confidence in Apple's lucrative services business and reduced tariff risks, indicating a belief in its intrinsic value. The market's relatively quick recovery from the iPhone 17 disappointment also highlights underlying demand and investor resilience. However, there are compelling reasons for a bearish outlook as well. The underwhelming iPhone 17 launch, characterized by merely incremental upgrades and a lack of breakthrough innovation, has raised concerns about Apple's ability to drive a supercycle of upgrades. Apple's AI strategy remains a significant overhang, with critics arguing that Siri lags behind rivals and the company faces challenges in talent retention, even losing a key AI researcher to Meta. A P/E ratio of 30.3, as mentioned in financial news, indicates a high valuation, which leaves little room for error and makes the stock sensitive to any negative surprises. The recent sale of approximately 20 million Apple shares by Berkshire Hathaway, one of its largest institutional holders, also introduces a note of caution, suggesting questions about its long-term valuation. Persistent macroeconomic headwinds, including a weakening labor market and rising inflation, could further impact consumer spending, directly affecting Apple's core product sales. For short-term traders, effective timing hinges on observing key technical signals. A decisive break above the $240 resistance, especially confirmed by above-average volume on the 1-hour or 15-minute charts, would be a strong bullish signal. Such a move could see the price quickly target $245, offering a clear entry point for long positions. Conversely, a sustained break below the immediate support at $234.35, or more critically, the $226.79 post-iPhone dip low, would confirm bearish momentum. This could open up shorting opportunities with targets around $220 or even lower, depending on volume and broader market conditions. Always look for candlestick patterns, such as engulfing patterns or hammer/shooting star formations around these levels for added conviction. Long-term investors should prioritize fundamental developments. Monitoring Apple's upcoming AI strategy announcements will be crucial, as compelling AI features could quickly shift market sentiment and drive significant upgrade cycles. Any news on the performance or future iterations of the iPhone Fold could also be a substantial catalyst, confirming Apple's ability to innovate beyond its traditional lineup. The company's commitment to accelerating automation and robotics in its supply chain, as reported, suggests efforts to boost efficiency and margins, which is a positive long-term signal. Watch for quarterly earnings reports and management commentary for insights into consumer demand and strategic direction. Finally, continued institutional support or further trimming by major holders like Berkshire Hathaway will offer clues about long-term confidence. To recap, Apple, APL, is currently trading around $237.88, having shown resilience after the iPhone 17 dip. The immediate key resistance is $240. A sustained break above this level has a moderate to high likelihood, 65%, of occurring if overall market bullishness continues and no new negative news emerges. This would likely target $245 and then potentially $260 if the momentum holds. On the downside, critical support lies at $226.79. A decisive break below $226.79 carries a higher likelihood, 75%, of a further decline towards the $220 zone, especially if Apple fails to deliver on AI expectations or if broader economic indicators worsen. Traders should closely watch volume patterns around these key levels, as significant volume can validate a breakout or breakdown. Also, keep an eye on Apple's upcoming AI-related announcements, rumored for early 2026, which could serve as the next major catalyst to either propel the stock higher or confirm bearish concerns.